Mercer showed that the Philippine capital tied with Mumbai, that is as the 78th most expensive city for expats to live in this year, up 2 spots from last year's ranking. The Mercer 2021 cost of living survey took into account housing, transportation, food, clothing, and entertainment costs in 209 cities worldwide. Mercer Asia Pacific said the Philippines' rise in ranking was due to the peso strengthening by 4% against the US dollar this year. RCBC Chief Economist Mike Ricafort believes Manila's more expensive cost of living could be attributed to a relatively faster increase in real estate rental rates and higher inflation over the past few years. Asian cities dominated the top 10 list of most expensive cities for expats. Ashgabat in Turkmenistan topped this year's list, replacing Hong Kong, which slipped to second place. The national government's budget deficit narrowed in the month of May. That's as the double-digit surge in revenues outpaced spending on base effects. Data from the Treasury Bureau showed that the fiscal gap by 1% to a little over 200 billion pesos in May from 202 billion pesos a year ago. This comes after government revenues jumped 69% year on year in May, mainly due to a 61% rise in tax collections. Overall spending also rose, but at a slower pace of 29%. Year-to-date, the budget deficit edged up by 0.7% to about 566 billion pesos in the 5 months to May. Now, for that period, total state revenues increased by 13%, buoyed by a 27% jump in tax collections. Meanwhile, overall state spending only grew by 8.8% in the same period. Economic managers capped this year's budget deficit at 1.8 trillion pesos or 9.3% of GDP and stood firm on their policy to observe fiscal prudence amid calls for bigger stimulus package to fast-track the recovery. Opening the markets this Wednesday morning, a quick check on our index, firming up at 6890.40. That's up by 0.3%. Now, this, of course, comes as we saw yesterday, finally reversing course here. This, according to Jafet Tantiangco, Philstock's bargain hunters took opportunities out of the markets preceding 4 straight days of a decline, but we are still not past the 6,900 levels, which analysts have said have proven to be quite a strong resistance. Let's take a look at which ones are our movers in the first 4 minutes of trade. ICTSI up by 2%, leading the pack together with Robinson's Retail, Metrobank, and JFC. Now, on the downside, you've also got Aboitiz Power sliding by 1.6% together with SM Investments Corporation. We've got more on specific stocks to be going through today. Let's take a quick peek at San Miguel and how that is going. This as they get the OK signal to sell up to 30 billion pesos worth of bonds. San Miguel up by 0.6% here. Of course, they had announced this already earlier on. This forms part of a planned issuance of up to 50 billion pesos worth of bonds over the next 3 years. Now, they did mention that the offer period yesterday will be, they mentioned yesterday that it will be running until June 28th. Recall that they're allocating 100 billion pesos for CapEx this year, especially in big ticket projects. Now, speaking of some new projects underway, let's take a look at the energy sector. AC Energy, which is up by 0.9% to 8 pesos and 58 centavos. This as they announced yesterday that their 120 megawatt solar farm in Alaminos in Laguna has started commercial operations and is now supplying renewable energy to the grid. They say that this is the second largest plant. It can power around 80,000 homes, plus avoid more than 111,000 metric tons of carbon dioxide greenhouse gases. They also said that they're collecting plastic from the packaging of these solar panels to upcycle it into eco bricks and incorporate that into building facilities. So this, of course, comes as the World Bank is helping the Philippines develop the market for offshore wind power. Recall that the Philippines has over 170 megawatts worth of offshore wind potential. That's according to the Department of Energy. And, this comes as well as, I had mentioned that Aboitiz is the loser today. And we have some strands from Bloomberg that the Commission on indigenous peoples is ordering an issue order versus their plant. So the indigenous peoples here targeting actually the building of Aboitiz power plants, but we will wait for more strands on that story. Now, here to chat with us about all of these developments, we have with us Corinne Agravio of Regina Capital. Good morning, Miss Corinne, and welcome back.
Hi, hello, Danny. Good morning.
Good morning, Corinne. Let's take a step back and look at our index performance. It's been a tight range, but nevertheless, after 4 straight days of weakening, after we had seen quite a nice rally preceding that, we are now trading between, now we're actually breaching 6,900 levels again. Is the Fed scare, so to speak, already been priced in, and all of these comments about inflation actually being temporary in the Fed have now eased our worries of the BSP having to catch up in terms of interest rates?
Well, I would say so, yes. The Fed scare has actually been priced in. Mostly it was just a knee-jerk reaction. We saw the reaction over in the US. Investors were really scared first, and then stocks started to rally the next coming days. That was the same case over here in the domestic market as well, since we're actually tracking Fed movements, we're tracking the Dow, we're tracking the S&P. So when investors started selling down the stocks over in the US, the Philippine market started to copy it and started to get scared as well, since the BSP meeting is coming up this week. Mostly, I would say that it's already priced in, and we're starting to rebound from the initial sell-off. Since the BSP as well assured investors that the dovish tone or the hawkish tone that the Fed set earlier this week won't really negatively impact the Philippine market as well.
Are you worried about our currency depreciating, and whether this would impact, of course, foreign fund flows here to the Philippines, especially with the oil prices now above $70 a barrel?
Well, it's more of a short-term thing right now with the oil prices more than $70 a barrel, and then at the median estimate is actually 46 pesos to the greenback by the end of the year, and that's it's a moving target as well. So right now, that's not an issue, since it's more of a, I would say traders are looking into, let's say, 3 to 6 months into the future. They're really not pegging long-term goals just yet. So it's not an issue right now.
Okay, let's talk about the domestic economy and the vaccine rollout and also the reopening and how that is affecting your stock picks. What now are you looking at? Should we be picking up the cyclicals once again? Is the worst over for them? And is this now the time to be bargain hunting?
Well, stocks were up yesterday, and it was a technical reaction at most, from the 6.7 to 6.8 level. As you said early this morning, we were breaching or close to breaching 6.9. So there's really not much movement on that front, on the index names front, aside from the fact that investors seem to be done taking profits after the highs from the previous weeks. So they're now rotating back into the index names and taking their positions once again. So what's crucial now, I think, is whether or not the index will be able to break the resistance at 7K, because that means that the rotation into index names will be on a relatively crucial level, as I said, since the 7K, aside from being a 4 month long resistance, the 7K level is also a psychological barrier. Most investors would see the index hitting above 7K and think, oh, it would probably be time to start taking profits. So that, I think, is what would make or break the index and the market right now. If investors will start to take profits above 7K, then there will be another rotation into second liners, third liners. So that's what the investors should be watching right now.
What catalyst are you waiting for specifically that you think might break the 7K?
Or on the corporate front, there are really no big catalysts, but on the macroeconomic front, that's really where the positive news will come from, if ever. So there's the news of herd immunity. All things considered, if we're at optimal levels, say we'll reach herd immunity by the end of this year, that will be one big catalyst that could really push up the market. And then there's also the vaccination program. If if everything goes
Mhm.
well, if everything goes as planned and on time, that would be one thing. That would be one fundamental thing that would be solid enough to boost the index above 7K and make it rally to sustainable
Mhm.
levels.
What are your thoughts on the food players, especially the ones that are in malls and now expecting increased food traffic? Is that going to be returning to normal levels anytime soon? When you look at their corporate earnings, have you increased your projections in terms of their earnings for the rest of the year? This, as of course, Jollibee is even more bullish and still doing some joint ventures on the side with more openings for Yoshinoya.
Well, most earnings from the consumer sector were relatively in line. Even Jollibee earnings for the first quarter were in line with our estimates. So no upward revisions just yet, but that's only for 2021. Since we largely expected that all or most of the consumer companies will still be put under a lot of downward pressure since foot traffic is slow to recover. There is protracted lockdowns all over the country. But that it's a different case for 2022 next year and beyond. So that's really where we're going to see the consumer companies starting to recover back to pre-pandemic levels. All things considered, if again we the vaccination program, it all comes back to that. If the vaccination program accelerates or remains in the timeline.
Okay. And finally, your thoughts on Wilcon, who is targeting to sustain 600 million pesos of profit per quarter, 7 to 8 new openings per year until they reach 100. And this, as of course, IKEA is scheduled to open here. They're saying it's not a threat. Do you agree with this? Do they have a fundamental business case here for growing despite this pandemic?
Well, I would say they do. They do actually. First quarter earnings were pretty solid for Wilcon. Their sales recovered back to pre-pandemic levels, and then their net income spiked, I think, more than 80% during the quarter. So there is fundamental growth. There is solid growth backing their claims of 600 million earnings per quarter. And it's really a bullish outlook, and the bullish outlook is sustained and is sustainable. And a lot of its aggressive expansions are warranted
Mhm.
since sales are starting to increase. They're actually better than pre-pandemic levels. And margins are also starting to increase. A lot of the customers are buying in-house brands, which are boosting Wilkins margins as a whole. So, and on the IKEA end, I agree with what they said that there's really not much impact. It's not a threat since it's only in Manila, right? And Wilcon has a lot of branches outside of Metro Manila as well, which actually helped the firm recover or actually maintain their stability during the pandemic when Metro Manila was under ECQ. Um, the
Correct.
sales
The
outside.
price though, the price is reaching its all-time high. It's close to
Mm,
19 pesos now. Is that
mm.
justifiable?
Well, right now, our valuation for Wilcon ranges from 18 to 18.5.
Okay.
So I would say consider that first before buying into Wilcon, since I think a lot of the investors are seeing how Wilcon is outperforming the index and outperforming the industry. So they're buying into the stock. So if you do buy into Wilcon, I would say wait for I'd say a discount at most. But if you're looking into the longer term, it's a good company, fundamentals are strong, and there's growth there. You'll find growth there.
Okay, so a good story and just a little bit expensive at the moment with a lot of interest from investors. Thank you so much for those insights, Corina Agravio from Regina Cap.
Okay, thank you, Danny.
Checking in on the biggest stories, we are keeping our eyes on HSBC analysts project that the Philippines will reach herd immunity sometime around April 2024. If realized, it would make the country's vaccination programs the third slowest among the Asia-Pacific region, ahead only of Vietnam and Bangladesh. HSBC's Chief Investment Officer for Asia, Fan Chuk Wan, said that because of the slow pace of vaccination, Philippine economy will remain on a slow path to post-pandemic recovery. This as daily infection cases continue to stay at relatively elevated levels compared to the rest of Asia. Although Wan noted that the accelerated pace of vaccination amid improved supply will help support consumption recovery later this year. Recall that in March, HSBC Research downgraded its growth outlook for the Philippines this year to 6.3%. That's from the 6.5% forecast it issued in January. Both are near the lower end of the government's 6 to 7% growth target for 2021. The Treasury raised its planned borrowings from the local market to 235 billion pesos in July. That's as it seeks to offer longer tenors amid strong demand and a low-rate environment. The Bureau is looking to borrow 60 billion pesos via Treasury bills offered every Monday. Another 175 billion pesos is seen to be raised via Treasury bonds as the agency plans to hold weekly auctions again every Tuesday. The government is looking to borrow 3 trillion pesos from domestic and external sources this year to help fund a budget deficit that is capped at 9.3% of economic output. And that is a first look into the business day. Today is Wednesday, June 23rd, 2021. Catch Businessworld live for the market close at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.